Yesterday, someone used just $4.50 to buy something most people think only rich people can afford. They didn't have thousands of dollars. They didn't have a finance degree. They didn't have any secret insider connection. They simply opened an app on their phone, pressed a few buttons, and suddenly owned a piece of something that normally costs more than an entire paycheck. Now you're probably wondering, what on earth can you possibly get for just $4.50 that's that powerful? That's the interesting part. With that tiny amount of money, this person became a real legal owner of some of the biggest companies in the world, all at the same time. And no, this isn't a magic trick. It's not some shady crypto scheme. It's not gambling. It's a brand new way of investing that didn't even exist 10 years ago. And in this video, I'm going to show you exactly how you can start doing the same thing in 2026 with as little as $5, step by step. But first, if making your money work harder sounds good to you, go ahead and smash that subscribe button. Trust me, your future bank account will thank you for it. Okay, real talk. For decades, investing was basically a rich people's club. You needed thousands of dollars just to get in the door. Minimum account balances, expensive broker fees, and those intimidating "you must be this tall to ride" signs everywhere. But here's where it gets interesting. Something happened in the last few years that completely demolished those barriers. A $1.1 billion industry exploded into existence in 2026 called micro-investing, and it's growing at nearly 20% every single year. Now you might be thinking, okay, what's the catch? And honestly, there isn't one in the way you'd expect. This isn't some get-rich-quick nonsense. This is real investing, the same stocks and funds that billionaires buy, except now you can own a tiny piece of Amazon for less than the price of a burrito. The craziest part? Most people have no idea this even exists. They're still thinking you need a finance degree and a fat wallet to invest. Meanwhile, millions of regular people are quietly building portfolios while standing in line at Starbucks. So let's break down exactly how this works, because once you see it, you'll wonder why everyone isn't doing this. Here's the beauty simplicity of it all. Micro-investing platforms let you invest amounts so small they'd make traditional Wall Street brokers laugh. We're talking $5, $1, even literal spare change from your daily purchases. But wait, you're probably saying, how can I buy a share of Tesla when one share costs like $250? And that's where fractional shares come in. Think of it like this. Imagine you and 249 of your friends each throw in $1 to buy a pizza. You all own a slice of that pizza, right? Fractional shares work the same way. You're buying a tiny piece of expensive stocks, and you get all the same benefits as if you owned the whole thing. Your slice grows when the stock goes up. You get dividends proportionally. Everything. The platforms pool everyone's money together, buy full shares, then divvy up ownership based on how much each person invested. It's genius, really. Now, there are three main strategies these platforms use to help you invest without even thinking about it, and this is where things get spicy. Strategy number 1, roundups. This is the one that blows people's minds. You link your debit card to the app. You buy a coffee for $4.37. The app rounds it up to $5, takes that 63 cents and invests it. Every single purchase. Coffee? Invested. Gas? Invested. That late-night taco run you're not proud of? Yep, invested too. Acorns pioneered this back in the day, and now it's everywhere. People are literally investing their spare change without even noticing it's gone. One user said they accidentally invested $500 in a year just from buying groceries and not changing a single spending habit. Strategy number 2, fractional share trading. Apps like Robinhood and Webull let you decide exactly what you want to own. You want $3 of Apple? Done. $7 of Microsoft? Easy. $2.50 of that hot AI stock everyone's talking about? Go for it. You're in complete control, building your own portfolio like you're playing fantasy football, except this actually makes you money. Strategy number 3, robo-advisors. This is for those of you saying, I don't know what to buy, I just want my money to grow. Platforms like Betterment and Stash take your money, ask you a few questions about your goals and risk tolerance, then build you a diversified portfolio of ETFs automatically. They rebalance it, manage it, do all the boring stuff while you live your life. It's like having a financial advisor, except it costs like $3 a month instead of thousands. Let me give you the current landscape, because not all platforms are created equal. Acorns is still the king of automation. Their roundups feature is unmatched, and they've added banking features, retirement accounts, even investing accounts for your kids. It's perfect if you want to be completely hands-off. Monthly fee starts at $3, which sounds like nothing until you realize that's 60% of your returns if you only have $5 invested. So you gotta build it up. Robinhood is the OG disruptor. Commission-free everything. Fractional shares starting at $1, and you can trade stocks, ETFs, options, even crypto all in one place. The interface looks like a social media app, which makes it ridiculously easy to use. They even have Robinhood Gold for $5 a month that gives you a 3% match on IRA contributions. That's free money, people. Webull is for people who want to level up fast. Free trading like Robinhood, but with way more advanced tools, charts, and analysis features. You can trade during extended hours before the market even opens. Plus, they're giving new users up to $30,000 in tiered sign-up bonuses right now in 2026, which is honestly insane. Then you've got Public, which is doing something totally different. They let you invest in alternative assets like art and collectible sneakers alongside regular stocks. It's wild. They also have a social feature where you can see what other investors are buying and follow their portfolios. It's like Instagram meets Wall Street. And don't sleep on the traditional players. Fidelity and Charles Schwab both offer fractional shares now with zero commissions. Schwab's Stock Slices lets you buy pieces of any S&P 500 company for as little as $5. They don't have the flashy apps, but they've got trust, stability, and they've been doing this for decades. Here's the part that most YouTube videos skip, but it's actually the most important: the compound effect over time. Let me paint you a picture. Say you use roundups and invest an average of $1.50 per day. That's basically nothing, right? That's $45 a month, $540 a year. You might think, big deal, that won't make me rich. But here's the thing, if you do that consistently for 20 years and the market gives you a historical average of 7% annually, you're not looking at $10,800. You're looking at over $23,000. Your money doubled itself just by sitting there and growing. Now combine that with actually learning about investing, maybe adding an extra $50 or $100 when you can, reinvesting your dividends, and suddenly you're playing a completely different game. The people who started micro-investing in 2015 with literally spare change are sitting on portfolios worth tens of thousands of dollars right now. But hold up, because I need to hit you with the real talk nobody wants to hear. Micro-investing isn't perfect. There are legitimate downsides you need to know about before you dive in. First, fees. When you're investing tiny amounts, even small fees hurt. If you're paying Acorns $3 a month but only have $50 invested, that's a 6% annual fee. That's brutal. The stock market historically returns around 10% per year, so fees are eating more than half your gains. That's why you need to scale up quickly once you start. Second, these platforms make investing so easy that some people treat it like a game. They check their portfolio 47 times a day, panic when it drops 73 cents, and sell everything. That's how you lose money. The whole point is long-term growth. Set it, forget it, and check in quarterly. Third, you're not going to get rich quick with $5. Let's be crystal clear about that. Micro-investing is about building habits, learning the market, and growing wealth slowly over time. If you want life-changing money, you're going to need to increase those contributions as your income grows. And fourth, market volatility is real. Your investments will go down sometimes. That's normal. That's part of investing. The key is not to freak out and sell everything when the market dips. Actually, that's usually the best time to keep investing because you're buying shares at a discount. Now, here's what makes 2026 specifically interesting for this. The micro-investing industry just hit $1.1 billion in market size and is projected to hit $2.2 billion by 2030. Why? Because smartphone penetration is at an all-time high, digital banking is everywhere, and an entire generation grew up watching their parents lose everything in 2008 and become terrified of the stock market. Micro-investing is fixing that fear. It's giving people a safe, low-stakes way to learn investing without risking their rent money. And the platforms are getting smarter. They're integrating AI-driven portfolio management, personalized investment advice, and some are even connecting with digital wallets and payment apps. Here's a wild stat. 95% of people in developed countries are projected to have smartphones by the end of this decade. That means micro-investing platforms are literally in everyone's pocket. The barrier to building wealth has never been lower. And here's the kicker that nobody's talking about. Micro-investing is actually teaching financial literacy. People who start with these apps learn about compound interest, diversification, market cycles, and risk management through hands-on experience. They're not reading boring textbooks, they're watching their actual money grow and learning from real outcomes. Some platforms are even gamifying it in healthy ways. Stash lets you invest in themes that match your values, like clean energy or tech innovation. Public has social features where you can learn from other investors. It's not just about money anymore, it's about education and community. But here's my favorite part, and this is where it gets really powerful. Micro-investing is creating a generation of investors who started young. Kids and teens with apps like Greenlight can round up purchases and invest their allowance. Imagine starting at 15 years old with compound interest working for you for 50 years. That $5 investment could turn into serious wealth by retirement. The game has changed. The question isn't whether you can afford to invest, it's whether you can afford not to invest. So let's talk about how you actually get started today, right now, before you close this video and forget about it. Alright, here's your action plan. This is stupid simple, so there's literally no excuse not to do it. Step 1, pick your platform. If you want automation and don't want to think, go with Acorns. If you want control and advanced tools, try Webull or Robinhood. If you want something in between, check out Stash or Public. Most of these apps give you bonuses just for signing up, so take advantage of that free money. Step 2, download the app and set it up. This takes like 5 minutes. You'll need your ID, social security number, and bank info. Nothing crazy, it's standard financial stuff. Step 3, start small. Link your debit card for roundups or set up a $5 weekly automatic investment. That's it. Don't overthink it. You're not trying to get rich in week 1. You're building a habit. Step 4, learn as you go. Most platforms have educational resources built in. Watch a video, read an article, understand what you're buying. Knowledge compounds just like money does. Step 5, increase over time. As you get comfortable, as you earn more money, bump up those contributions. Turn $5 a week into $10, then $25, then $50. That's how you build real wealth. And listen, I know some of you are sitting there thinking, yeah, but I'll do it later. Don't be that person. Every day you wait is a day of compound interest you're losing forever. Time in the market beats timing the market every single time. The wealth gap in this country is massive and it's getting worse, but micro-investing is one of the few tools that's actually democratizing access to the same wealth-building strategies rich people use. Don't sleep on this. If this video helped you realize that investing is actually possible for you, go ahead and hit that like button. Drop a comment below and tell me which platform you're going to try, or if you're already micro-investing, share your experience so others can learn. And if you want more content about building wealth, making smarter money moves, and understanding finance without the boring jargon, subscribe to Casual Cash Flow. We're dropping videos every week that'll level up your financial game. Remember, you don't need to be rich to start investing. You need to start investing to become rich, even if it's just $5. Now get out there and make your money work for you. I'll catch you in the next one.